Welcome to a discussion of Chubb's Pandemic Business Interruption Program proposal. This is your host, Jason Chubb, founder and managing member of the Centers for Better Insurance. On July 8, Chubb released its Pandemic Business Interruption Program. Chubb is the world's largest publicly traded P&C insurance company and the largest commercial insurer in the United States. Chubb's proposal relies on the insurance industry for front-end distribution, such as insurance agents and brokers, to sign up businesses to participate in the program, and back-end capabilities to administer claims for benefits and payouts under the program. The proposal also envisions insurers would take on some of the financial risk under the program. In the event of another pandemic, participating businesses would be entitled to payouts, subject to a waiting period, intended to cover continuing expenses, such as payroll expenses, and, in some cases, continuing operating expenses, such as rent and utilities. The proposal is split into two parts. Part one is called the Business Expense Insurance Program. This part is aimed at small businesses, meaning businesses with less than 500 employees. The vast majority of small businesses are expected to participate with formula-based benefits meant to facilitate quick and simple claims processes. Part two is known as Pandemic Re. This part applies to businesses with more than 500 employees. It would be more expensive for these businesses, suggesting a lower participation rate. Benefits would cover actual expenses and go through the normal claims adjustment process. Every insurer writing small business insurance would be required to offer the program. A business could opt out by acknowledging it has no insurance coverage for future pandemics and would not be eligible for any federal pandemic program. A participating business would be eligible for a payout of 3 times its monthly payroll, subject to a 2-week waiting period. The small business program would pay out up to $750 billion for pandemic events in a program year. The federal government and insurers would split the first $250 billion. The insurer share would start at 6% and grow to 12% over the 20-year life of the program. Small businesses would be charged each year they participate in the program. The cost would reflect a risk-appropriate charge for the insurer's share. There is no upfront cost for the federal share. Participation in Pandemic Re, the program for medium and large businesses, is optional both for insurance companies and businesses. A participating business may purchase up to 3 months of expense coverage, subject to a $50 million limit. This medium and large business program would pay out up to $400 billion for pandemics in a single program year. The federal government and participating insurers split the entire program. The insurer share would start at 5% and increase to 10% over the first 10 years of the program. A business participating in the Pandemic Re program would pay a risk-appropriate charge for both the insurer share and federal share. You can find out more about insurance and the pandemic risk at betterins.org. On behalf of the Centers for Better Insurance, thank you for spending this time with us.